As long as we're on lockdown, the packaged food companies can practically coin money. This morning, Conagra Brands reported some okay numbers, nothing that great, but management's commentary about the current quarter was just stunningly positive. We theorized that Conagra's brands must be flying off the shelves thanks to the quarantine. When you can't go out to eat, well, Hebrew National, Chef Boyardee, Bertolli, Slim Jims, Orville Redenbacher, Bird's Eye, frozen veggies, they're exactly what you need. But now we got proof. Only last month, Conagra had to cut its forecast because business was just okay. On the call this morning, though, management told us they're currently seeing significantly increased demand in the consumer business right now. And that's why the stock rallied nearly 4% on a terrible day. So let's take a closer look with Sean Connolly. He's the president and CEO of Conagra Brands to hear more about the quarter and what's going on here. Mr. Connolly, welcome back to Mad Money.
Hey, Jim, thanks for having me.
Well, Sean, these are astonishing numbers, and I just kind of want you to go down the aisles. The center of the store I thought nobody went to, but I see Conagra product here, Conagra product there, and the numbers are stellar. Go through.
You know, Jim, we're selling everything we can make. Times like these call for extraordinary resiliency. We have an incredible responsibility. We've got to keep people fed, nourished, and as food often does, comforted. I guess you could say we're doing good by tasting good. But right now we're running flat out to keep our food coming, and I'm incredibly proud of our team as they navigate these challenging times.
Sean, Bird's Eye, my supermarket, nothing, no Bird's Eye. How's that possible?
Yeah, it's selling out as soon as the trucks arrive at the store. The good news is we've had really no disruption at our plants. That's where our heroes are, the plant folks that are making products round the clock 7 days a week so we can keep it coming. My advice is try to time your trip with when the trucks show up at the store because it doesn't last very long once it arrives on shelf.
Wow, that's unbelievable. Now, how about this brand that's been around a little bit that my vegan daughter introduced me to, and we have a lot of vegetarians in the staff, Gardein. What kind of numbers? You're putting up 24% number?
Yeah, Gardein was growing robustly even before this crisis, Jim, and it's like much of our portfolio, it's only accelerated since. And I think what you're seeing here is consumers are eating everything at home, breakfast, lunch, dinner, snacking, and dessert. So we're selling all kinds of food across all kinds of day parts because people are sheltering in place, and that's a good thing, and we're trying to do our part.
Now, I was kidding with my partner, David Faber, who's never done anything in his life other than have his wife serve for him. But this, that's a joke. But Chef Boyardee, now I know some of that was promotional, but that had numbers like I haven't seen in years.
Yeah, I mean, Chef Boyardee is a classic canned good. When you see a crisis like this, the way it unfolds, Jim, is you tend to see canned goods move first. But very quickly after that, we saw a shift to frozen, and the frozen portfolio that we have, which is quite large, has really matched the center store grocery business in terms of growth rates. And more recently, we've seen it move over to our snacks business as well, which is growing every bit as fast as the rest of it. So Chef Boyardee it was growing nicely before COVID. It's doing very well now. People are having flashbacks to their childhood like David, and hopefully they're having a good eating experience.
All right, now, you are asked in the conference call about the intermediate. I mean, look, one day we hope this thing ends. Holy cow, this is a bad thing. What do you think is the possibility that people say, you know what? My childhood food turned out to be made much better than it used to be, and it's less expensive. I'm sticking with it.
Well, the place where that makes the most sense to me, Jim, is in the frozen business. As you know, the frozen food business, the portfolio of Conagra has been completely rebuilt in the last 5 years. So the quality is much greater than it used to be. And a lot of consumers in this crisis are experiencing that for the first time. And I'm sure they're going to take note of it, and it should be a positive going forward. But that said, you know, that's really not what we're thinking about right now. We have an important responsibility here, and that's to keep people fed and try to keep them comforted in this time of high stress.
But you also have made some use of a very novel company to do the compostable packaging. And I think once people see that, they also it eliminates an objection that the millennials might have had to what you were serving.
Well, you're exactly right, Jim. When you look at our products in frozen right now, many of them are not in the classic plastic trays, and a lot of consumers don't like that. They're in plant-based packages that look like butcher paper you'd get from your local butcher. So they're very popular. This will be the first time many people experience that, and I think they will find it a superior alternative like the other people who have tried these products before them.
Help me with the term that you use that can make things more illuminating. You bent the trend in legacy Pinnacle Foods. The word bent made it was kind of like a geometrical drawing, but I thought maybe you could explain this. This is important because it's an acquisition you made that we really want to pay off. A lot of parts are already paying off, but this seems like it's an inflection point.
Yeah, when we acquired the Pinnacle business, we found several of the key businesses were in a little bit tougher shape than we thought they would be. And when we got under the hood to look at what was ailing them, we quickly told our investors, look, there are no shortcuts here. We're going to do this the right way, and it's going to take some time. And you should expect that when we get to the back half of our fiscal year, we will begin bending that trend because we will have pulled the weak spots, weak items out of the market. We will have rebuilt new items and introduced them to the market. And then you'll see a methodical trend bend upward. And that's exactly what we saw in the third quarter, and we see that continuing right through today. And that's a very good thing, Jim, because one of the big reasons we acquired the Pinnacle portfolio was because we have so much confidence in frozen as the perfect food form for today's consumer. And a lot of the Pinnacle brands, like Bird's Eye, are just iconic brands that have done well for many years, and they just needed to be modernized. Well,
you have another iconic brand. There are a lot of great companies in consumer packaged goods. McCormick reported a very good number, but had weakness in food service. You have a food service business, too, that's very important. Do you think that can be offset by all the good things we've just been talking about?
Yeah, about 10% of our business, Jim, is food service, and we have important customers in the food service channel of trade, important consumer patrons who are sitting at the table having this experience, and obviously that's been disrupted. We will more than make up for that weakness with the strength of our retail business, our at-home consumption business. But, let's face it, over the last 20 years, consumers have really fallen in love with eating away from home, so we do expect it to bounce back. And we're rooting for the food service folks because there are a lot of people in the food service industry struggling right now, and we're hoping that resolves itself too because they run great businesses.
I would be wrong not to if I didn't bring up Slim Jim, which is just doing incredibly well. Dave's, which is doing incredibly well. Duke, just talk about the convenience store because a lot of people felt that people aren't going out to the convenience store, but your numbers are too good for me to believe that that's the case.
Yeah, what I think is happening there, Jim, is people are prioritizing online shopping and traditional retailers, and so we're beginning to see a bit of a mix shift. Our C-store snack business is a little bit lighter than our previous run rate, but we are making that up in traditional channels of trade. So you still see very strong numbers in our snack business across the board, but there is a different dynamic happening in C-store than is happening in traditional retail because people are really trying to stay out of the store as much as they can, and they want to make those trips big stock-up trips. And that tends to point to traditional bricks-and-mortar grocers, super centers, and online. Yeah, but what do you say to someone like my wife who lives on Swiss Miss? Every morning she has Swiss Miss. But because she has it every morning, she buys it online. I mean, how much money can you make on that? Our margins are good online. It's not a dilutive experience for us. Our online business has exploded, Jim. Yeah. We're actually growing faster and faster every quarter, and now our growth is outpacing our competitors. So we're gaining share online, and that didn't happen by accident. We've invested to build a team there to work with the traditional retailers who built their online business as well as the pure blood e-tailers, and that business is thriving for us. And we've got very collaborative relationships, as you might imagine, in times like now when those retailers are really looking for steady supply. Right. Well, you're one of the stories that worked during this period, and I think it's going to work continually because you offer good value, and that's what people want. So, Sean Connolly, President and CEO of Conagra, thank you so much for that hopeful outlook and deserving reaction in the market. Always good to talk to you, Thanks, sir. Jim. Take care. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.